Hi guys, if you're a trader, you must know about Jerome Powell, who is the current Federal Reserve Chairman. Based on his Fed rate cut speech, the market will decide its direction. On October 14, 2025, Powell indicated that the US Federal Reserve may consider cutting one more interest rate before the end of 2025. A change in US interest rate cuts directly influences the Indian financial system, its foreign investments, stock market, currency stability, and inflation. The following analysis examines how a Fed rate cut could affect India's economic landscape and what the future may hold. Point number one, capital flows and foreign investment. When there is a Fed rate cut, interest of foreign investors attract towards the emerging economic country like India, as it was visible in August 2025 when net inflows into Indian debt market rose sharply after 2 months of decline. Point number two, Fed rate cut impact movements in the rupee. Stabilizing the rupee and reducing imported inflation pressures in the medium term could be achieved through Fed rate cuts later this year, which could eventually weaken the dollar globally. Point number three, bond yields and borrowing costs. Global borrowing costs are highly sensitive to US interest rates. Lower global yields also reduce costs for Indian corporations and government bodies that borrow abroad. Companies with dollar dominated loans face less pressure in servicing their debt. This is an indirect but significant benefit to Indian firms that depend on global credit markets. Point number four, trade imports and inflation. India imports large volume of crude oil, natural gas, electronics, and its industrial equipment. At the same time, if the Fed continues cutting rates and the dollar weakens globally, the cost of imports could fall. This would relieve inflation pressure. Point number five, RBI's monetary policy response. Fed rate cut will provide incentive to RBI to cut its repo rate, and if inflation remains under control,